Our next guest sees the S&P rallying to 6,300 by year end, but says we could be entering what he's calling a zone of hesitation in the next couple of weeks. Joining us now, Tom Lee, Fundstrat Capital Chief Investment Officer and a CNBC contributor. It's good to see you, Tom. I want to talk to you about the bonds 10-year at some point, but you see four reasons why you still expect the S&P to continue to rally in December and maybe to 6,300 by year end. What are the four reasons?
Well, one is seasonality. December historically is a strong month, but when you're up more than 10% in the first half and it's an election year, December's been up 100% of the time. The second is yields have moved down to pre-election levels. You know, the 10-year's at 4.1. That's good for multiple expansion. The third is, I think it's been surprising, but sentiment's actually turned negative the last 2 weeks, even as the markets rallied. To me, that's a contrarian bullish signal. And then finally, we still have those two puts, the Trump put and the Fed put. And I think that means you still want to buy any of these dips.
What can Trump do to make sure the market keeps going up?
Well, I think we've seen it with how he's made cabinet proposals or nominations, that he's very pro-business. And I think, as many have said, Trump is very focused on the stock market. So I think communication is still a strategy, and it's a reminder that animal spirits could come back.
I don't know if you watch the way the financial, say this tactfully, I don't know if you watch the way the financial media industry covers tariffs. I mean, how can you call him pro-business, according to these people, when he's pro-tariffs? Because you would just think, you know, if you've watched the coverage of tariffs.
Yeah, I mean, to me, it's a reminder that it's good to carry a big stick, and I think tariffs have proven to be a good negotiating tool. I think we've seen some proactive actions by other countries. And in general, I don't think the new White House wants to pursue any policies that would hurt corporate profits. So I think ultimately, whatever is accomplished is going to be pro-business.
That's interesting. All right, I hope everybody's listening. At least that's one man's opinion. Whenever we talk about like the 10-year, it's always well, it'd be good this way, but it would be bad this way. If it is falling, which is good for multiple expanding, why isn't that indicating that maybe the economy isn't as strong as we thought, and that maybe corporate profits won't hold up their end of the multiple expansion on one hand, but sometimes that's combined with a slowing in profit growth?
It is a possibility, and it's always hard to tell what the bond market is telling us. But when I look at the next 6 to 12 months, and we know the Fed wants to reduce the cost of capital for homeowners in mortgages and for small business owners, having the 10-year stay at these levels or even fall is actually an easing of financial conditions. So to me, that's a good sign.
In the electrifying and ever-evolving world of stock markets, where numbers dance and fortunes seemingly change with the tick of a clock, comes a piece of exhilarating news that has investors buzzing with excitement. An announcement from one of the industry's foremost titans, Nvidia, has rekindled the flames of interest and speculation among market enthusiasts. Known globally for its powerhouse performance and dominance in the artificial intelligence chip market, Nvidia's recent strategic moves have captivated the financial landscape. And why shouldn't they? The buzz around a potential stock split is akin to infusing a sudden splash of color into an otherwise monochromatic photograph. Such financial maneuvers are often seen as pivotal turning points, sparking renewed interest. But what exactly has Nvidia orchestrated to light up the stock market fervor once again? Let's delve deeper to uncover the intriguing developments surrounding this tech giant. Welcome back, everyone, to Investocracy.
Do you think that trying to this Elon Musk, Vivek Ramaswamy thing, do you think it's that they can make real progress, and B, would that be a positive for economic growth, or would it be a negative for economic growth because you're laying people off, you're spending less?
Well, I think it's great that someone is scrutinizing these.
Bernie Sanders said it was great.
Yes, that's right. And these are
That's
huge.
not good. No, go ahead. Sorry.
Well, I mean, these are huge budget items, and so I'd love to see someone really identify where there could be waste. And is that bad for the economy? I think in general, most people view government spending as the least efficient capital. So if you reduce government spending, and it's been crowding out private sector spending, I'd rather see the private sector reinvest that capital. And I think that would overall be very good.
You sound like it's a zero-sum game. I mean, a lot of people would take any spending they can get, whether it's government or otherwise, for an economy, for juicing the economy.
Yeah,
you think it would go into private if it's not spent by the government?
Yes, that's right. I think that would free up money because this is, money, the capital that the government spends is competing with private sector money. I'd rather see the private sector invest this money at a higher rate of return. So I think overall it'd be positive for GDP and profits and for equities.
Do you want to, we always get a Bitcoin comment from you before we let you go normally. It got stuck under 100. That's a pretty, it's a psychological level, I would imagine.
Yeah, I think some of this could be, there's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter. So you have a supply shortage, and if Bitcoin makes a move above 100,000, I think there'd be a big chase. So I'm still confident Bitcoin's going to close much higher before year end.
Before year end?
Before year end, yeah.
So break $100,000 before the end of the year?
Yeah, well above 100,000 before year end. It's just a matter of time.
It's December 2nd. It's not that long, Tom. So it's going to do it in the next 4 weeks.
Tom makes bold short-term
I know,
calls.
You're nuts, and they all come. Usually they come true. On a roll. All right.
The stock market can often feel like an unpredictable roller coaster ride, rife with ups and downs, twists and turns. However, amidst this turbulent journey, one company that has experienced an exhilarating upward trajectory is none other than Nvidia. Since its inception, Nvidia has become synonymous with innovation and record-breaking financial accomplishments, dominating the AI chip market with unmatched prowess. Its financial performance speaks volumes, with earnings that have soared to unprecedented heights, driven by an insatiable demand from AI customers across the globe. In the latest quarter, Nvidia remarkably reported revenues exceeding $35 billion, firmly positioning itself as not just a vanguard in technology, but also as a leader in profitability. Observing Nvidia's financial reports is akin to viewing a cheat sheet from a game of Monopoly, filled with stacks upon stacks of phenomenal wealth. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Back to the video.
Is there much left to impress investors heading into next year? Here to take on that question, Tom Lee of Fundstrat. He joins me at Post 9, also a CNBC contributor. Tom, good to see you. Thanks for coming in.
Yeah, great to see you, Mike.
So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is how do we set expectations for the year to come, given that that's all in the books?
It's a great question because, we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup because we have a new administration coming in that's maybe pro-animal spirits, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems as if there are all these supportive factors, and when you mentioned the 20% up years in a row, history says actually, the following year is up more often than not as well. What do you mean, do you think, specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction, but are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets, but I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
Beyond Nvidia's stellar financial performance, what has truly captivated investor attention is its strategic adeptness in navigating the complex intricacies of stock splits. Nvidia is no stranger to this sophisticated financial tactic. The company adeptly maneuvered a significant 10-for-1 stock split earlier this year, a strategic move that effectively lowered its stock price from a daunting $1,200 to a more accessible $120 per share. This strategic maneuver not only democratized investor access, but also reaffirmed the unwavering confidence investors hold in Nvidia's future trajectory. Historically, Nvidia has embraced stock splits as a means to bolster access to its shares, effectively rolling out the red carpet to a broader audience of investors. This strategic approach, seamlessly coupled with their groundbreaking technological innovations, has fortified Nvidia's position at the forefront of the competitive tech market. However, despite its historical willingness to split shares multiple times before, with notable stock splits in 2000, 2001, followed by another round in 2006 and 2007, the current market sentiment does not necessarily indicate an imminent stock split. Currently, with its share price hovering around $138, the psychological barriers that investors previously faced are no longer as daunting as the $1,000 mark that once stood tall. The chip giant, renowned for consistently pushing technological boundaries with its visionary AI innovations, appears to be on an organic upward trajectory that doesn't necessitate another stock split to validate its intrinsic value. While some market speculators may remain intrigued about the possibility of a split on the horizon, the prevailing consensus is characterized by wholesome optimism towards Nvidia's new innovations, particularly the highly anticipated Blackwell architecture and forthcoming chipset, poised to make a significant market debut soon. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's interesting to me that, the way the market has behaved in the last several weeks, but even going into the election, was we need to own more cyclicals, we need to own more financial stocks, we're going to reprice this market for maybe a growth acceleration even, or at least maintaining above trend growth. Meanwhile, though, we're only a couple months removed from a pretty big growth scare. Job growth has kind of slowed to a point. The housing market seems pretty locked up. It's kind of interesting how the sentiment has kind of jumped ahead. Is the economic numbers positioned to actually validate that view?
Markets tend to be forward-looking, so I would expect this. I know there has been a recession in durable goods and in housing and auto sales, principally because of high rates, which have made affordability an issue. That's really on the come next year. I mean, I think the spread of 10 years and mortgages should come down, and the 10-year hopefully behaves. And I think if there's more confidence and more supply, I think housing actually could lead this recovery. I mean, I think that's why home builders actually started to act better this week as well.
Yes, they seem very sensitive too to yields, sort of halting their rise as well. I guess the question is, if we believe it's still a supportive environment, then pretty much all the things you can identify would suggest you shouldn't be too worried about next year. The second question is something like the S&P 500 the best vehicle to capitalize on that?
I think investors are still trying to figure this out. We did a survey with our institutional investors and our RIA clients last week. The majority of institutional investors don't think FANG is the leading trade. They're actually betting on cyclicals. But if you look at the RIA world, the majority are betting on FANG. So I think the market is still undecided whether to be long the Mag 7 or the cyclicals. I'm inclined to be more cyclical and bet even on small caps having a very big year next year.
So, as we reflect upon Nvidia's incredible journey, one might ponder whether Nvidia truly represents the stock market's golden ticket in a landscape characterized by dynamic change and fierce competition. Given its unstoppable momentum and stellar track record, Nvidia undoubtedly emerges as a strong contender. The company has showcased remarkable resilience and inventiveness, articulating a compelling narrative woven through both groundbreaking innovation and strategic stock splits. While the current share price might not immediately trigger another split, it undoubtedly highlights an attractive point of entry for discerning investors who recognize the intrinsic value embedded in Nvidia's pioneering AI developments. As we deliberate the prospects of adding Nvidia to our investment portfolios, it becomes abundantly clear that the allure lies not merely in embracing its current remarkable success, but in embodying a steadfast belief in its future marvels, poised to redefine technological frontiers. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.